In the heart of today's rapidly evolving global economy lies a market that holds promise amidst uncertainty and yet appears to be misunderstood in Australia. Welcome to the world of platinum group metals, or PGMs. With the global pivot towards green technology, PGMs such as platinum, palladium and rhodium will continue to play a central role in that transition. For example, more than 80% of platinum's end uses are in activities where it's used as a catalyst, predominantly to improve energy efficiencies and reduce harmful emissions. However, like many commodity markets, the PGM industry has faced a complex outlook over the past 12 months. From supply chain disruptions to competing views on the outlook for demand, uncertainties abound. Global production in the sector is dominated by South Africa, where the world-class Bushveld complex is home to the largest PGM resource in the world. And recent market ructions have prompted a round of belt tightening among the major South African producers such as Implats and Anglo-American Platinum. But according to Sterck, the Director of Research at the World Platinum Investment Council, the long-term fundamentals for the PGM market remain strong despite the recent short-term fluctuations.
So it's actually a really important metal from a green perspective in terms of reducing those harmful emissions, and looking ahead, of course, it's particularly important as we go through this great energy transition that the world is trying to pivot towards. So just unpacking some of those end uses, I'll just start with jewellery and investment. So jewellery is roughly only about 20% of the market, so fairly small, and that's relatively static. Investment demand is quite variable. Goes from negative investment demand that we've seen in some years when there's been substantial disinvestment from ETFs, to positive investment demand that totals up to around 20% of the total market. But unpacking the rest of platinum's uses, 40 to 45% of platinum is used in the automotive industry, in the exhaust treatment systems for internal combustion engines. So that's effectively where you take the exhaust gases from engines, petrol and diesel engines, and convert those gases into less harmful emissions than they would be if they were left untreated. The remaining approximately 35 to 40% of platinum demand is in industrial applications. And that's where there's a myriad of end uses for platinum, and they range from the petrochemicals or chemicals industry, where platinum catalysts are used to accelerate chemical reactions and reduce energy requirements, to things like the glass industry, where platinum is used in coordination with rhodium, which is one of its sister platinum group metals, as effectively a kind of lining agent for these huge tanks of molten glass. And then finally, and most importantly, looking ahead and thinking more deeply about the energy transition, platinum is critical to the future hydrogen economy. So it's used as the catalyst both in the electrolyzers that take water and convert that water into hydrogen and oxygen using electricity from renewable power sources, and also in fuel cells where hydrogen is fed in, recombined with atmospheric oxygen, and that produces an electrical current for things like backup power generation, but also as an alternative to battery electric vehicles. You can have a fuel cell vehicle and then hydrogen tanks, and use that hydrogen to power those vehicles in the same way that a battery does today.
The World Platinum Investment Council is due to release their Platinum Quarterly Report this month, and Ed is adamant that while short-term capital investment into new mines is unlikely given the current market conditions, there still remains demand for high-quality PGM materials.
The irony here is that actually now is the moment we really should be investing in new production. If you look at the demand profile going forwards, particularly for platinum, it's actually extremely robust, and there is a risk that we end up with a material shortage of metal in the future. For palladium, the story is a little bit more nuanced in terms of future demand. So we actually see a pretty stable outlook in terms of demand for palladium going forwards, but there is quite a significant increase in recycling supply that's expected to come through in the next few years. So if we look at 2023, for example, I'm going to talk about platinum terms now. Recycling rates are down around 25% versus the preceding 5-year average. So if we look ahead and pivoting back to the palladium, if we don't see a recovery in recycling rates, then the palladium market, which on consensus estimates is expected to move into a surplus, the palladium market actually ends up remaining in a deficit for the foreseeable future, and that's quite transformative in terms of the outlook for that metal.
When assessing ASX-listed companies in the PGM space, One Junior has emerged in the last couple of years as a key player in the exploration and development of palladium and platinum. Southern Palladium is a dual-listed company developing the advanced Bengwenyama PGM project, a top-tier asset particularly rich in palladium and rhodium, located in South Africa's prolific Bushveld complex. Helmed by former Minerals Council South Africa CEO Roger Baxter as chairman and experienced mining executive Johan Odendaal as managing director, Southern Palladium recently completed a scoping study for Bengwenyama that showed very attractive economics, with results justifying the progression to a pre-feasibility study which has already commenced. And according to Sterck, Southern Palladium's location is the best postcode possible for PGMs for one specific reason.
The reason is geology. It's simply extremely well endowed with the best PGM deposit in the world. And I say deposit specifically because it is one massive deposit effectively. So you've got this geological structure called the Bushveld. And it's a massive igneous intrusion with it stretches east to west. It's about, I think it's about 300 kilometers wide east to west, about 250 kilometers north to south. And effectively, it's one massive ore body. There's multiple different mining operations around the edge and the periphery of this ore body, and effectively, they're all just nibbling in towards the middle. There are some nuances in terms of the balance of PGMs in different parts of the ore body and changes in grade. But fundamentally, there's a huge resource there that if one can continue to go deeper effectively forever, the resource will last for the foreseeable future. It's just a question of putting in place the infrastructure to be able to extract the metals, and obviously for the PGM prices and the economics to be able to support that extraction.
Dubbed the next significant PGM producer on the eastern limb of the Bushveld, Bengwenyama's location provides significant benefits, particularly as the project moves from exploration towards mine development. In addition, it's one of the last development projects in the most lucrative PGM province in the world, meaning Bengwenyama could become a key cog in the world's largest supply PGM chain.
So giving some context to how important South Africa is in terms of global supply, in platinum terms, it's about 70% of global mining supply. The next biggest producer is Russia at about 11%, and obviously there's some geopolitical questions over the ethics of sourcing PGMs from Russia at the moment. In palladium, it's even more acute. So 45% or so of palladium supply comes from South Africa, and about 45% of palladium supply comes from Russia. Now, thinking about the kind of ethics of using material from Russia, one of the interesting things about PGMs, at least their uses in terms of the catalytic converters that are treating emissions from internal combustion engines. In petrol engines, you can substitute platinum for palladium more or less on a one-to-one basis. So if you're a Western automaker that's looking to reduce reliance on Russia for your supply chains, an alternative would be, instead of using Russian origin palladium, you could use palladium or platinum from South Africa as an alternative.
Of course, looming above the PGM space currently is the recent price pressure on key metals palladium and rhodium, while platinum prices have stabilised following a drop from their 2021 peak. So where's the upside? To decipher that, it's necessary to first analyse the reasons for the fall.
The reason for the fall in the palladium price has been kind of the consensus view it's moving into a surplus. The reason platinum has been range bound is, fundamentally most market participants see a much more attractive outlook for platinum. So looking ahead to this year, I'm thinking about what might happen. Obviously with the end of automaker inventory adjustments, we would expect there to be less, or we would expect more price support to come through for platinum and for palladium. And if you think about palladium specifically, the market is incredibly short palladium in the futures markets. It's about as short as it will get, and that makes it highly vulnerable to short covering squeezes. So any kind of news in terms of risks to mine supply or to the recycling supply that I've mentioned could be highly positive for both platinum and palladium, and particularly thinking about palladium with the risks of those short covering squeezes.
While the PGM price remains in flux, there remains opportunities for investors, with rock-solid fundamentals underpinning an ever-present demand for PGMs. And as Southern Palladium continues to power through development at Bengwenyama, there is plenty of upside to be observed as the company consolidates its position as the next major PGM producer in the South Africa's Bushveld complex.